You can't fix a revenue cycle you never measure, and most addiction treatment billing runs on gut feel. There are 5 numbers that tell you the truth. Track these, and you can take the temperature of your revenue cycle month to month, quarter to quarter, and year to year. These are the top 5 KPIs most addiction treatment organizations use to track the success of their revenue cycle. So, what is a billing KPI? A key performance indicator is a measurement of success, a number you track to see how your billing is really doing. You watch it month to month, quarter to quarter, and year to year, so trends show up before they become problems. And once you track them, you can compare your revenue cycle to other organizations. Powerful knowledge to have. Without these numbers, we're flying blind. You can't take the temperature of your revenue cycle, so cash flow problems hide until they hurt. And you have no way to know whether you're keeping pace with the competition or quietly falling behind. Before we dig in, know this: the right platform is designed to track all 5 for you. BehaveHealth.com pairs a revenue cycle management platform with an EHR built for behavioral health providers. It's designed to support your whole operation, from admissions to treatment to billing, in one place. So, the data behind these KPIs lives together, designed to help you watch your revenue cycle, not chase spreadsheets. Let's walk through all 5, what each one tells you and which direction you want it to move. Each answers a single plain English question about your money. KPI 1, Net Days in AR. This answers one question: how long does it take us to get paid? It shows how efficient your revenue cycle is at turning claims into cash, which drives your cash flow. You're shooting for as small a number of days as possible. KPI 2, Cash Collection as a percentage of net revenue. This tells you how well your revenue cycle turns patient services into actual cash in the bank. It compares the cash you actually collected to the revenue you should be receiving if every bill was paid on time. The higher the percentage, the healthier your billing. KPI 3, Your Claim Denial Rate. This is the share of your insurance billing claims that get denied. A high number is a red flag that something's wrong with how your organization submits claims. Keep this one as small as you can. KPI 4, Final Denial Write-Off as a percentage of net revenue. This is the share of denied claims that turn up nothing, even after you finish the appeal process. These claims get written off, usually for tax purposes, so the money is simply gone. The lower this number, the better. KPI 5, Cost to Collect. This answers how much you spent to collect each dollar, your revenue cycle's efficiency, in one number. It includes the hidden work, retraining clinicians on documentation, reviewing claims, and running appeals. And again, the lower the number, the better. Put together, these 5 give you a scorecard for your billing. Net Days in AR and Cash Collection tell you how fast and how fully you get paid. Denial Rate and Final Write-Off tell you what's slipping through the cracks. And Cost to Collect tells you what it all costs, so you know exactly where to improve. Stop flying blind on addiction treatment billing. See these numbers come to life in one platform. Book a 20-minute demo of our RCM platform and EHR at BehaveHealth.com.